Okay guys, so I think we are officially in a recession. I think we could all agree on that. And we want to know, is the land business dead? Are we still doing deals? How do you even do deals in a recession? So what we're going to cover in this video is what we're doing to still have great months, month after month, what we're doing to prepare if things get worse in this business, and how we've kind of set up a moat around our business that's defensible against any change in the economy. And so I think this video is going to be of great value to you. So without further ado, let's dive into it. All right guys, I'm going to walk you through my 4-step framework, and I feel like I always do a 4-step framework in every one of these videos. Apparently I like 4 steps and I like framework. So let me walk you guys through exactly what we're doing to have a bulletproof business that's still performing, even though the real estate market is down in the dumps, the land market's down in the dumps. How are we still making things happen in terms of buying deals, selling deals, having new revenue coming into our business? Now I want to preface by saying I am not an economist. I by no means try to play one on the internet. I'm just telling you guys what's working for me, and hopefully you guys can implement it and take some value from it. The very first thing that we were doing, and we've been doing this for years, honestly this is nothing new to us, but I do not see very many other folks in the industry doing this. This is doubling down on service. This is becoming an A player. This is doing things correct in your business. And what does that look like? Well, for us, that's customer service. So treating all of the buyer leads that we get with the utmost respect, treating them as if we kiss the ground that they walk on. That means doing ridiculous things for them sometimes, things that annoy me, where we're going and calling the county and getting every tidbit of information from them, and really pushing the needle forward to make sure that they have every single question they could possibly have answered by my team. This also relates to our marketing. So spending money on our listings, spending more money than I would like to spend on our listings in terms of having best-in-class photos, best-in-class videos, having listing descriptions that tell you everything you would need to know to make a buying decision. You see, there's so many folks in this industry that go and take Google Earth images or go and take Street View images of the property. This is doing the least, and ultimately at a certain point, someone that is doing the most will come and eat your lunch. And so I think it's very, very important that we focus on customer service and we invest into creating a phenomenal customer experience for our customers. This is how you get people that say, hey, you know what? There's a lot of other land sellers out there. There's a lot of other great deals out there, or whatever it may be. I want to work with this person. I want to work with this group because they do things right. And so I think it's a really good way to differentiate yourself from anyone else in the market, whether you're in a recession or you're in a great climate where it's very easy to sell land. This has been important to us for years, and I'm seeing it starting to pay off. We're getting tons of SEO benefits with leads pouring into us for free. We're getting folks referring other potential land buyers to us. We're getting a ton of repeat buyers. But now, why is this important in a recession? Well, for us, what we want to do is we want to make sure that we have reserves. We have capital reserves. And so the less that I have to spend on acquiring a customer, the more capital we can have on the sidelines as a reserve, or the more capital we can deploy in acquisitions. So it's really, really important that we're actively focusing on how can we create a great customer experience, and in turn, how is it going to reduce the cost per lead for us and have leads starting to come to us organically to buy land. And at that point, you can outspend your competition. You can really kind of jump in front of the pack because you have a moat around your business. You have an advantage that a lot of other sellers do not have. Number 2, this is refining your comping process. So right now what we're doing in our business is we are looking at pending sales. Pending sales is going to be the very first thing that we look at in terms of going through and comping a property. We want to see what's actively actually pending right now. This is going to tell us if there's demand in the market. This is also going to inform us roughly what prices properties are selling at in the here and now. And the next thing that we're going to go look at is we're going to go look at properties that have sold in the last month, and we'll zoom out to the last 3 months, and then we'll pretty much kind of cut off our search at that point. We've seen that the market has drastically changed in the last 3 months, so anything beyond that's pretty misleading. If we have to go beyond that, we're going to apply a pretty hefty discount rate to it, call it 20 to 30%. And then for a lot of the comps that we're seeing right now, we'll apply like a 10 to 20% discount rate to it. So what that looks like, it doesn't mean that we're actually going to sell the property at the price or even list at that price. But if I'm looking at a property that's pending or sold a month ago and I say, if I apply a 20% discount to it, is this still a good deal? Is this still a deal I would want to have in my portfolio? And what that's doing is it's creating a buffer for us. So if the economy got so bad that our property dropped by 20% in the next, call it 90 days, would this still be a deal? Is there enough margin to justify this? And so we're just kind of tightening up our buying requirements. But the way to do this is by becoming better at comping and then applying a discount rate to the recent comps, the pending comps, things like that. Number three, and we just released a video on this, but is offering owner financing. As I mentioned in that video, owner financing is a tool in your tool belt. As liquidity is drying up, people have less free money to go and deploy in, buying recreational properties or things like that. It's more and more important that we're offering very affordable owner financing terms. We also have to think that lending requirements are kind of tightening up, interest rates are going up, and so if we can offer competitive financing on our properties, it's going to allow us to be a cut above the rest and make it a lot easier for someone to justify this purchase. In a lot of cases, land can be a luxury purchase for people, especially recreational land, which is mainly what we focus on in our business. We're not typically selling to other businesses as an end user, we're selling to consumers. Consumers are going to be hurt the most in a time where inflation's through the roof, the economy's slowing down. So it's really important that we're offering a very affordable and flexible situation where folks can come in and finance these properties from us. Right now we have it listed on every single one of our properties that's listed. Even if it's a uber expensive property or a very, very cheap property, it's still there. We're giving everyone the option to finance our properties. The fourth and last point, and this might strike you as a weird one, but focus on land that has true intrinsic value. Now, if you're someone that has built a business of flipping desert squares or properties that I would say have very little intrinsic value, this is going to be a time that becomes a little more tough, right? If you look in a market where there's been real demand for years because there's real market forces pushing it, right? Like there's job growth, there's population growth, there's development going on. Even if that stuff is constricting in this time, there's still intrinsic value there, right? Like a recession or a downturn in the economy is not going to make that stop to a screeching halt. And so if you're owning land in those areas that has real utility, that's in a market where there's real demand and there's underlying market forces that make that land valuable, it's going to hold its value a little bit better. And even if it does come down, you're still holding a good asset. Now, if you're strictly buying desert squares in Mojave County, I don't know why I always love to pick on this place, there's just not much intrinsic value there, right? Does not really meet any of those requirements that I just went through. Doesn't mean that you're not going to be able to sell that property, doesn't mean that you won't make money on that property, but those are not properties that we want to be holding in our portfolio, because you always have to be thinking, could things get worse, right? Things might be the worst that they're at right now, maybe we're at the bottom, highly unlikely. And so if things get worse, can you weather that storm? If not, well, you want to be really, really mindful about what you're holding in your portfolio. And so if you have a portfolio full of desert squares right now, I would be looking to get that stuff out. Any stuff that you feel like is questionable, get it out. Hold quality assets, right? Hold properties that have real underlying demand for them. And A, you should be able to sell those, and B, even if it takes longer, they should not depreciate at the same clip that you might see some of those other properties depreciating at. So yeah, guys, that is what we're doing right now. And of course, we are kind of adjusting our expectations, right? And I think expectations are really important. If you've been in this business for a year or 2 years and you're used to just having properties fly off the shelf, that's not normal, right? Selling a property in 7 days is not how this business has been for a long time. This is just a very random little sample size where things were really, really good. Things are going to slow down a little bit. That's okay. We'll sell properties in 60 days. We'll still make 200% on our money, 300% on our money, right? We'll still have incredible acquisitions going on in our pipeline. And that's one of the kind of the catch-22s is even though things are shifting on the disposition side, we're able to acquire better deals at deeper discounts because sellers are more motivated to sell, right? And so this is kind of on balance, not a big deal. The only big deal here is if your expectations are still aligned with how things used to be, you need to make sure that your expectations get caught up to how things are now. And so if you can understand that things might take a little bit longer to sell, you might not be getting multiple offers immediately. Maybe you're not selling it at a 250% return, you're taking 150%, oh boo-hoo. But you might be able to buy properties at a deeper discount. You might have higher yields from your marketing in terms of the acquisitions. So all in all, I don't look at this as a bad thing. We still have company targets for 2023. We're still going to hit them. We're just adjusting how we're doing it. We're making sure that we're playing the game safely. We're making sure that we're shifting our expectations. I advise that you do the same thing.